gold is near its high despite the interest rate hike. That's true. Interest rates and gold are inversely correlated. However, it's real interest rates and the price of gold, and that's Gibson's paradox, which speaks to the inverse relationship between real interest rates and gold.
Yeah, I know what you mean. And perhaps some days when I wonder, will this thing ever move? I mean, on the other hand, we still do have gold near 2,000 bucks despite the interest rate hikes over 1,800, not far off from the all-time high. And I think something that maybe it's a little bit easier for me because, I'm able to sometimes step away from the day-to-day price. And when you look at where things are going, I mean, you see Joe Biden, and I'm not trying to take political sides, but I mean, it doesn't paint a picture of someone who's in control and knows what they're doing here. And you see these things with Russia, and there's a lot to suggest that some sort of new system could be coming. Yet it's tough, and I think for a lot of people listening, it's challenging because, like that scene in The Big Short, where it's like we're betting on something to happen that's never happened before, at least in our lifetimes. I mean, this has happened before historically, but that's something that I think is a challenge for me.
Let me address that.
What would you say there?
Let me address that. Thank you. In 1974, Henry Kissinger struck a deal with the Saudis to value oil in dollars globally through OPEC. And for that, we would protect the Saudi kingdom. The fact that Russia signed a joint military cooperation agreement with Saudi Arabia the day after we left Afghanistan with our tail between our legs, and the next day did it with Nigeria, signals the beginning of the end of things that we've seen in our lifetime. In our lifetime, we've known nothing but dollar hegemony, dollar strength, and the world reserve currency. I would argue those days are coming to an end. And so that's when things change. And, when people are looking at alternatives to something that you're recommending, recommending is the wrong word, talking about the virtues of it. Look at every other asset class out there. Stocks, bonds, real estate are all at all-time highs, courtesy of the Fed's low interest rates and easy money policy. If indeed, and forget about what I'm saying about the dollar losing its singular petrodollar status, but what happens if the Fed is true to its word? What happens if the Fed really does start to raise rates continuously, to really start selling 90 billion worth of treasuries and mortgage-backed securities, which you told me just the other day had no bid at one point. But what happens if that happens and the balance sheet starts to dwindle and the interest rates start to rise and the house prices start to exponentially decrease and the stocks and bonds start to decrease in the face of rising interest rates? All of the assets that we just talked about are inversely correlated to it. Now, you mentioned gold is near its high despite the interest rate hike. That's true. Interest rates and gold are inversely correlated. However, it's real interest rates and the price of gold, and that's Gibson's paradox, which speaks to the inverse relationship between real interest rates and gold. And when you talk about real interest rates and the Fed getting tough on inflation, 1.5% on the federal funds rate with 9% inflation is not getting tough. It's spitting in the ocean. So, and I'm just going to focus on gold for one moment. Gold is doing what it's supposed to be doing with all of the other assets in securities and in cryptos getting crushed. Gold is holding its own, and it's up a little bit, 1 or 2%. Everything else is down 15 to 30%. But remember, there's a 90% correlation between gold and silver throughout all of history. So if gold leads the way, typically silver will catch up and surpass it in performance. The arguments that you're giving are completely sound and completely logical. It's a depleted asset. It's massively needed in industry. It's hugely accumulated monetarily. And it's just disappearing. So I think that in the end, you'll be proven right, Chris. And we all need voices like yours to hang in there and to keep telling us that we're all on the right page. And the research you do, the way you stand up to the CFTC and what you've already brought to the table with your Bart Chilton interview and many other things that you have that no one else has uncovered in all these years. I can understand why it weighs on you. I can, and it does on me too. But yet, if you looked at my portfolio, and I know if we looked at your portfolio, what's inside of it, it's almost entirely what you talk about. And so your conviction is something that's admirable, as is your wanting to let people know that you're a human being too, and it weighs on you. But in the end, mathematics, logic, and economics will prevail. And that's the best we can all do, Chris, is try to find something that's logical, that meets the test of economics, meets the test of mathematics, meets the test of old school logic. And you can check all three of those boxes. But sometimes logic and outcome in this crazy world have been inversely correlated until they're not. And that till they're not will happen. It's just a matter of when. Some people would say, with all the inflation we have right now and the craziness, why hasn't it happened yet? Well, I'll answer that. And that is because this is all about dollar hegemony. We are entering a period of time, the Great Reset, or whatever you want to call it, where the dollar is teetering, where the system that we've built upon a mountain of debt cannot handle a rise in interest rates. And it's either death by hyperinflation or death by depression. Take your pick, one or the other. And in the end, I do believe that you will be proven right. Gold and silver will be the last men standing, as everything else tries to find fair value in a world where price discovery is all but impossible, even in gold and silver right now.
Yeah, well, I think that makes sense. And perhaps it also depends on the approach someone is taking. I get it. We're in a trading environment. People are looking to buy low and sell high. And I think perhaps why I at least try to phrase things the way I do, where, hey, here's what I'm looking at, here's what I'm doing, why I did not choose to become a financial advisor, is that as I look at the situation, if it takes a couple of years, I'm okay with that. I mean, to me, I'm had my adventures since leaving Wall Street and the process of forming a business. There were times where I didn't have income. Now that, I can meet my expenses and then leave things sitting there for whether it's a year, 5 years, 10 years. I mean, I do see a problem building. And what I felt extremely confident about back in 2011 or even 2009, when I started learning Austrian economics, is that the Fed was going to run into these problems that it has. Now, of course, since then, you had a big rally in the stock markets, which didn't occur in the silver market, although perhaps I'll pull up the NASDAQ chart here, because I think something that would be useful for people to take a look at is that my feeling was a lot of the rise in the NASDAQ was primarily just the result of money printing. I don't see a lot of productivity happening in that past decade. And to some degree, seeing just here's a 30% down move just in the last half year alone, as they've raised interest rates now 1.5, 1.75. And I think that's the thing. It leaves so few alternatives, where you have the traditional school, Peter Lynch saying stocks for the long run, which makes sense. But now that they're pulling the money away, it leaves some tough choices. And I think that's why it's good for each person to really have the full information and decide what's right for them. I mean, if you need something in 2 years, is different versus if you have the advantage of time. But in the whole scheme of the way these financial markets operate right now, it certainly does not leave an easy set of choices.
No, it doesn't. But look at what you're fighting. Look at the red bar up there. I mean, that's just bullshit. Snuff out inflation with the 75 basis point increase. Snuffing out inflation would be raising the federal funds rate by 800 basis points. Now you're snuffing out inflation. We're still a long ways away from snuffing out inflation. And I think that's, I'd rather have someone shoot straight with me based upon years of experience in starting with being a Wharton grad all the way up to Wall Street, figuring it all out and talking to me about something logical with mathematics and economics that makes complete and total sense. Yet you look at the world around us of finance and none of it makes sense. And it's all based upon, like you said, easy money and low interest rates, where the markets were jacked up to irrational levels. And that's what made people feel wealthy. That's what allowed them to offshore all of our manufacturing capabilities, so that people felt wealthy with their 401k in their home, and it didn't matter that we didn't produce anything anymore. But these types of decisions have consequences. And I think at the same time, we've angered the world with our mismanagement of the currency. And not only that, with our weaponizing of the dollar, telling the Russians who can and who can't use the dollar, knocking them out of SWIFT, freezing their assets. Don't you think that the rest of the world is thinking, are we next? China thinking this, are we next? Look at the relationship right now that was just struck between Iran and India. The rest of the world, 85 to 90% of the world, does not care what the US says we can and cannot do. So look at the SIP system, the cross interbank payment system, which mirrors the SWIFT. This is a program that China has developed in conjunction with Russia. The steps are being put into place, or the pieces are being put into place to challenge the dollar. And when all of that money gets dumped, if you think inflation is bad now, the Fed is fighting with the 75 basis point increase, wait until see what happens when 90% of the world who has to own dollars to buy oil starts to shed dollars in favor of other currencies, because now OPEC is allowing other currencies to buy oil. And I think that's where we are heading. And when that happens, not only do you see massive inflation, but you see interest rates go to the moon. There's your Klaus Schwab Great Reset. When the world dumps dollars, when the dollar is no longer the petrodollar, and they all come home, massive, massive, massive hyperinflation, massive rising interest rates, stocks, bonds, real estate, and the dollar all collapse at the same time. Why do you think gold was reclassified tier 1? Why do you think the central banks keep purchasing it? So I'm simply saying you will be proven right, and it will be at the expense of the dollar. It will not be something that you will be happy to see, because it'll be at the expense of everyone around you. But I do think you will be proven right. And I, for one, admire the fact that it weighs on you. That means that you're sincere. And sincerity and honesty is the most important thing that we can have in investing or financial advice. You're sincere, you're honest, you put your money where your mouth is. I know what you buy, I know what you own, I know what I own. And you and I are both very, very sincere about it. And that's the best you can do, Chris, because you're smart as hell, you have the pedigree to prove it, and the courage to stand up to the big boys that most of us don't have. So the fact that you're just showing that you're actually human, I think is admirable above all else.